Hi, my name is Gwen Gates. I'm one of the wellness coaches in the wellness department and the Journey to Wellness program at Logan Health Medical Fitness Center. I have a background in health promotion and wellness and a master's degree in therapeutic recreation. In between working in the health promotion field and the psychology field, I also owned a restaurant for 14 years. Now, while I'm not a financial expert by any means, financial wellness is a big part of my overall wellness vision and helps me to achieve some of the goals that I have. I've also found some things along my journey that have been helpful to me, and while I'm always learning, I'd like to share some of those things with you today. Most of what we do is automatic. Breathing, driving to work, brushing our teeth, making our bed. But this is especially true when it comes to how we handle our money. Today, I'm going to share with you 8 simple ways to be more mindful and start saving money versus wasting money. You can't change something that you're not aware of. The majority of us are very aware that we don't have enough money, right? Well, the point of today's presentation is to help you be more aware of the spending habits that you can change to start saving money and using it for the things you want. Think back to where you learned about money. This is most likely where your spending habits started. I want you to think back to your earliest childhood money memory. What did it feel like to get money? Were you excited, proud, or confused? What did you do with the money? Did you run to the candy store, or did you run to the bank? What did you hear the adults in your life say about money? What did you see those adults do with the money? These earliest memories we have about money set the foundation of our money beliefs. As we move forward in the presentation today, I want you to think back to these money beliefs. Our goal today is to start gaining an awareness of our spending habits and make changes where we can if we choose to. Your spending habits have a ripple effect. They compound over time. Just like eating and exercise, bad habits get worse. Wellness habits can determine health or illness, where money habits can determine wealth or poverty. That's why it's super important to change your bad habits and replace them with good habits. Money habit number 1, pay yourself first. Our habit is to pay ourselves last. Think about when you get paid. What do you do first? You probably pay your bills. Your rent or your mortgage, you buy groceries and gas, maybe you buy yourself something nice or go out to eat, and then you try to save some money. But there isn't usually anything left. People who get ahead financially do the opposite. That means before they start paying their bills, before they start swiping their credit cards left and right and giving money to everyone else except for themselves, they put a portion of everything they make into their own pockets first. Then they pay their bills and live off what's left. They prioritize making themselves richer versus making other people richer. People who are good at saving money understand something called Parkinson's Law. Parkinson's Law is the principle that demands will expand to consume all available resources. For example, if you have a week to finish a project, you will take up all that time to finish it, and you will probably be pretty inefficient with your time. Whereas if you have 1 hour to finish that same project, you will be super focused and efficient and still get the project done. So, work expands to consume all available time. And it's the same with money. Your spending will expand to consume all available money. Whether you have $100 in expenses or $100,000 in expenses, your expenses will keep increasing to consume all your money. That's why making more and more money isn't always the answer, and saving your money after you do all your spending just won't work that great, because your spending will always rise to eat up all your money. You have to pay yourself first. Treat saving money like a bill. Reframe your thinking. As soon as you get paid, commit to setting aside 10% or $50 or whatever it is you decide to set aside for savings and investments, and then just live off of what's left. If you want to stop letting money slip through your fingers and you actually want to start keeping some of what you make for yourself, then start implementing habit number 1 today. Money habit number 2, stay authentic to your money goals. Do you have friends who have expensive taste? Friends who always want you to go out to expensive restaurants or go shopping with them or go on trips with them? If you have friends with bigger budgets than yours, it's okay to be authentic and say, you know, I can't do that because I'm saving for this, or I'm working towards some financial goals right now and it's just out of my budget. If they are real friends, they will understand and adjust to a more affordable activity. Everyone has very different levels of taste as well as very different budgets. So trying to keep up with everyone around you is going to leave you broke and in debt. This includes friends as well as people you see on social media. The reality is the average American has very little in savings and an average debt of $67,000. This does not even include mortgages. So a lot of what you see in terms of amazing lifestyles on social media is often just an illusion. You may have heard stories of people, or maybe even know people, who post photos of themselves in exotic vacation locations or eating at expensive places just to make it look like they have a glamorous lifestyle. But the reality is they are deep in credit card debt with zero in savings and investments. So don't be fooled. A lot of what you see is not real, and chasing experiences just so you can post a cool photo on Instagram or Facebook or look good to everyone else is a recipe for ending up broke. It basically comes down to this: would you rather look rich or be rich? If you dream of becoming financially independent one day, you have to stop caring what everyone else thinks about you. No one else is going to make it happen for you but you. Setting your intention, making a financial goal, and learning how to speak up for yourself is the key to financial success. Once you have that financial goal, keeping it in the forefront of your mind will help you turn down invitations or problem solve to find more affordable activity options to suggest to your friends. Chances are people will respect you for having your priorities straight, and it might even inspire them to reassess their financial priorities as well. Money habit number 3, only put purchases on your rewards credit card if you have the money to pay for it in cash. I love my credit card. Credit cards are amazing things and have truly changed the financial landscape. They can also be very dangerous and have caused many people to get into some very tough financial situations. What we are going to talk about here is just using your credit card to get the rewards points. If you spend money just to get the rewards points, you end up spending a lot more money than you would have otherwise and cancel out any savings benefit. I am guilty of this mindset as well. Sometimes I find myself in a situation where I can't afford something, but I really want it. And then I start justifying the purchase with thoughts like, well, at least I'll get the rewards points for it. This is a very, very, very slippery slope. If you have the mindset that spending money to get rewards points will get you lots of savings, here's the reality. The typical reward redemption value is about 1% of what you paid to earn it. So if you spend $100 at Lowe's, you're getting $1 in rewards points. You certainly want to take advantage of rewards points as it is a benefit if you need something. My point is, you don't want to spend money you don't have just to get the rewards. That's like buying sardines because you have a coupon for them. You probably don't even like sardines. Okay, let's say you need sardines for a recipe. Okay, then just buy them with cash. Don't put everyday small items on a credit card. Use your reward cards for purchases over $100 and be sure you can pay it off immediately. That means that you have the cash but are using the card to get the rewards. Once you make the purchase, go home and pay off the balance immediately. Credit cards have a way of increasing your mindless spending. Don't rack up a bill to the end of the month and be surprised at how much you spent. If you can't afford it now, don't buy it. Money habit number 4, organize your finances. Having disorganized finances is basically another way of keeping your head in the sand. If you have credit cards open everywhere, student loans or other loans that you don't really know the balance of, and you're not really sure what you're spending every month, it's time to consolidate. There are lots of great apps out there that make it very easy to track all your financial stuff. For example, Mint is a good one. You can connect all your bank accounts and your credit cards. They will look at your spending and your income and tell you what your spending looks like every month. You can also put all your accounts and look at your net worth and see how it changes over time. It only takes a few minutes to set up and it's totally worth your time, especially if you are trying to get a handle and understand your current financial state. If you are concerned with putting your information into an app because of mistrust of online security, a spreadsheet is another way to track your spending. I love my spreadsheets. You can track all your spending and see how your net worth changes month by month. Tracking your spending allows you to see the progress you are making month to month. Not only is this hugely motivating, but it also helps keep you accountable to keeping your finances organized. You know where all your money is at all times. Something else that can help keep your finances organized is choosing a financial institution that offers a wide range of services so you can do all your financial stuff in one place. The less places you have to look for passwords and usernames, the better. Talking to a personal wealth management specialist at your banking institution can help you get started on this process towards organizing your finances. With technology and resources at your local financial institution, it's not too difficult to get started. The key is to get up the courage to look at where you stand financially. This can be a humbling and sobering moment, but until you know what your starting point is, it's impossible to get where you truly want to go. How can you get where you want to be if you don't know where you are now? So, get rid of the habit of staying confused about your finances and build a habit of staying organized and looking at your numbers regularly. Money habit number 5. Get comfortable with saying no to purchases you can't afford. We live in a society where practically everyone has debt. It's become totally normal. It's normal to have student loan debt, a car loan, a mortgage, and credit card debt. As a matter of fact, the average borrower has $25,000 to $50,000 in student loan debt. That's the average borrower, meaning they're asking for more debt. Listen, just because everyone else is living with debt doesn't mean that you have to too. To share a personal story, I graduated undergraduate school with no debt. I worked 2 jobs and had a very limited social budget. I decided I wanted to go to graduate school and did accrue some debt, but chose a state school versus something out of state, which would have cost way more money. My point is, don't let the normalization of debt influence your spending decisions. Pause and ask yourself if this is the only option. Are there other ways to get what I want or need without having to go into more debt? Do I absolutely have to have this right now? Can I wait and save money to make it happen? Don't settle for the status quo. Do whatever you need to do to live as debt-free as you possibly can. Money habit number 6. Be prepared, plan ahead. Have you ever been at the store and bought something you already had? Or bought something you knew you already had, but failed to plan ahead and had to buy it again? A good example of this is an ice scraper or gloves, since winter is right around the corner. If you forget to check the weather, it can cost you some money. Some other examples of not planning ahead is paying late fees. You forgot to check your account balance, and now you got an overdraft fee of $35. The average American spends $577 a year in late and overdraft fees. Now, I don't know about you, but I could use that money in a much more effective and fun way. Credit card interest is another example of failing to plan ahead. Accruing interest from high credit card balances because you don't save money or pay off your balance is frustrating. Checking your pantry before going to the grocery store and making a list can save you tons of money and time at the grocery store. Another thing to possibly check out is an app called TimeTree. TimeTree is a time management app that allows you to coordinate your calendars with other people in your family. So for example, if you want your husband to go to the grocery store and pick up a few items, you can coordinate that through the app. It's called TimeTree and it's worth checking out. Now, I'm all about living spontaneously, but if you're constantly rebuying things that you already have at home or paying extra fees and interest because you're unprepared, taking a few minutes to plan ahead and pausing can really save you some money. Check the weather, leave buffer time in between appointments, check your account balance every once in a while. Little things like this will help you save a lot of money at the end of the day. And after all, having money in the bank is what really allows you to live the spontaneous life you want. Money habit number 7, reduce your tax liability. Taxes are going to be the single biggest expense in your lifetime. So why not do what you can do to cut down your tax bill? Most of the tax loopholes are for the rich or people who own assets and businesses, but there are a lot of tax loopholes available to the average person as well. For example, you have the option of a 401k through Logan Health. Contributing to your 401k is a way to directly reduce your taxable income. In general, you owe taxes on any money you make that isn't tax-exempt income as soon as it comes into your possession. But with a 401k, the IRS allows you to contribute a chunk of your paycheck to that first, and then they will charge you taxes on whatever is left. The end result is that you pay taxes on a much smaller amount, and you get to save and invest with tax-free earnings. And if you are lucky enough, as Logan Health employees are, to have contribution matching, you are basically getting free money that is also tax-free. Win-win! 401ks are designed for retirement, so generally you cannot touch this money until you are 59 and a half, although you can take a loan against it in some cases. The HSA is another way to reduce your taxable income. It is designed to help you pay for health-related expenses with tax-free money. And the good thing is you don't have to wait for retirement to spend it. HSAs are a good idea if you are in good physical health and are looking for a tax-savvy way to cover your medical expenses. It's not the same as a flex spending account in that it rolls over year after year. It's not a use it or lose it situation. In order to take advantage of an HSA, you have to have a high deductible insurance plan. Talk to our benefits coordinator in HR for more information. Another way is to open an IRA, either a traditional or a Roth. These are investment accounts that shelter your dividends and profits from taxes. You don't pay taxes on the money you put into them until you take them out at retirement. However, with a Roth IRA, you don't see the tax savings before you put the money in, but you see it on the back end as you do not get taxed when you take that money out at retirement. And the way the world is going, who knows what tax rates will be by the time you retire. Keep in mind there are some pretty hefty penalties if you take money out before retirement. Talk to your tax advisor, accountant, or personal wealth professional to see what situation is right for you. Money habit number 8, start investing now. Like I mentioned in my first tip, putting things off, like saving money and investing for your future, is a very slippery slope. You might be thinking that you will start doing it one day when you have enough money, but more often than not, that becomes a never-ending cycle of procrastination and excuses. There will always be reasons why you can't invest or save, like, I don't have enough money. I don't even know where to start. I don't have time to learn. Or that's just too difficult for me. But the longer you put off investing, the harder you'll have to work to get to the same level of financial freedom as someone who has started investing earlier. Whatever you can put aside, even $10, $20, $50 a paycheck, start investing now. If you make it automatic, you don't even realize it's happening. And before you know it, your wealth has accumulated without all the heavy lifting required. If you think saving money and investing isn't fun for you, try to reframe how you think about it. It's not about discipline and deprivation, it's about taking care of future you. It's a form of self-care, and self-care is fun because it makes you feel good and can make your life so much better. So what's next? If you recognize yourself doing any of these negative money habits, be gentle with yourself. Don't beat yourself up. We are all learning. Most of us haven't learned this stuff in school or had good financial role models. Most people who have good money habits have learned it the hard way, by screwing up and wanting to do better. It's all about having the awareness and the financial literacy to notice whether your daily actions bring you closer to your financial goals or take you further from your financial goals. It's never too late to replace bad money habits with good money habits. Working on improving your relationship with money is what today's talk has been all about. There's nothing really new in this presentation, mostly reminders that we all need to hear to keep ourselves on the right track or get ourselves on the right track. Thank you for taking the time today to listen to this presentation. If you find that you need or would like a little bit more in-depth assistance, you do have some options available to you through Logan Health. The Employee Assistance Program does offer some free financial help. Contact Human Resources for more information. Also, every employee of Logan Health gets 3 free wellness coaching sessions a year. If you'd like more information about developing healthy habits in any area of wellness, not just financial, contact Rose Nicholson in the Wellness Department and take advantage of your sessions. If you'd like more than 3 sessions, the Journey to Wellness program is a fully reimbursable program once you've completed the 12-week program. Contact Michelle Marr for more information. A wellness coach isn't an expert, but we can be very helpful guide and support when navigating financial waters or any waters of change. Thank you for your time today.